us now for more from New York is Lien, the chief currency strategist at dailyfx.com. Kathy, good to see you again. So are Yellen's comments affecting the dollar?
They're not at all. I mean, the market right now really expects an interest rate cut from the Federal Reserve. So the comments from Yellen really do not do much in terms of shifting expectations. Bernanke, who's the head honcho out there, has really set the tone last week by telling us that he was much more concerned about the economy and much less concerned about inflation. So his comments are really all that matter. You know, the Fed is going back and forth. Rosengren this morning actually said that he thinks home foreclosures could increase significantly. He's more dovish. And I think ultimately we're looking at, a minimum of 25, maybe 50. And so Yellen's comments really did not matter all that much.
It looks like the Paulson's comments are having a bigger impact on the carry trade here. Henry Paulson leaving no sign of a bailout for mortgage problems. The Kiwi is now falling at Asian trade.
Yes, you're right. I mean, we've got a lot of pressure on the carry trades. I think a lot of people are worried that the subprime issues and the credit problems could really escalate. We had RBS Bank this morning report, I think it was £2 billion worth of additional subprime write-downs. The problems aren't over yet, and that's really is going to take a tumble on the carry trades. Also, I want to mention that the Dow, which is really what the carry trades are moving in lockstep with, is hitting a critical resistance point, which is part of the reason why, stocks turned lower halfway through U.S. trading, and also carry trade extended their losses as well.
So this level of risk aversion in the markets, is that here to stay until the Fed meeting on the 11th?
I think that volatility and risk aversion are here to stay. I mean, we did a study for the U.S. dollar going back 20 years, and we saw that over the past 20 years, the month of December tends to be very bad for the U.S. dollar. So I think that the factors this year are even stronger. We've got the subprime problems, we've got an interest rate cut, we've got the U.S. economy possibly fall into recession. So I think that volatility, risk aversion, and also dollar bearishness could continue.
So how much lower can the dollar go then if December is not such a good month for the U.S. currency?
That's a big question, right? I still expect us to hit 150 in the euro dollar. Beyond that, we've seen the last time we came at 149.68. The ECB started screaming a little bit. Trichet came out and said he was against brutal moves. I think beyond 150, we'll have a tough time extending its gains because we might have verbal intervention. But I think we're certainly going to retest that level at least.
Don't you think the dollar is getting some support here from Qatar's comments? Because Qatar just said that the Gulf states did not discuss ending the dollar pegs in their meeting.
Well, this morning when I came into the office, we already had news that Saudi Arabia wasn't going to drop their peg. And, the UAE was sort of undecided. So that really did not cause a dollar rally. In fact, the dollar is sort of weaker across the board. I think that, the Middle East Council comments were pretty much in line with expectations. No one was expecting a major revaluation. That could help the dollar a little bit. It should have this morning, but I think the limit of the support is really contained at this point.
We're just 2 days away from that ECB meeting. We do get PPI from Europe today and a speech from an ECB council member. How do you see the series of events moving euro trades?
I think that's part of the reason why I expect the euro dollar to rise to 150. Because, this morning we had PMI manufacturing numbers from the Eurozone, and they were fantastic. You compare that to the U.S., where we actually had slower growth in the manufacturing sector. It tells you why the ECB has to remain hawkish. Also, we had CPI numbers come out last week. Consumer prices grew at the strongest pace in 5 or 6 years. And that's really the reason why they have to be so, steadfast, so stubborn with their policy right now. So I think PPI is going to be strong as well.
Are you expecting any surprises from either central banks in England and Canada? Because there's been some talk that they may cut rates this week.
You're right. I think that's really where the wild card is, because both Canada and the UK have been suffering from weaker and weaker economic data. I actually would not be surprised at all to see a rate cut from both. The Bank of England is notorious for surprising the markets. There's been times in the past when they release a statement when they normally don't. There have been times in the past when they cut interest rates or raise interest rates when the market doesn't expect. Now that growth is really slowing at a rapid pace in the UK, I wouldn't rule out a rate cut. Also, same thing with Canada. CPI dropped significantly, and that really fosters an environment where they can cut interest rates if they want to.
Yeah, you got me thinking, is the RBA as notorious when it comes to surprising the markets? I mean, nobody's expecting a rate hike this week.
You know, the RBA is not. The RBA is really like the Federal Reserve, where they like to tell the market, months in advance what they plan on doing. So last time the RBA